this class. It's basically on finding confluence on a price chart. We're on the 21st of March, just after 2 o'clock London time. Before we get going, as always, let's just run through this disclaimer. Spread betting, forex, and CFD trade high level of risk to your capital and can result in losses that may exceed the initial deposit. Trading these products may not be suitable for everyone, so please ensure that you understand all of the risks associated with trading. Information comments provided here and in no circumstances are to be considered an offer or solicitation to invest, and all information provided is believed to be accurate at the date the information is produced. Nothing herein should be construed as investment advice. Information provided in the room is a personal opinion of the moderator and not Tradimo, and this content does not constitute financial, investment, or tax advice. Tradimo does not accept any liability for the content of or comments made during the session. Alright guys, so let's get on to today's class. Basically, we're going to discuss confluence, okay? Areas where we want to be looking to do business on a chart. When I refer to confluence, we're talking about basically multiple factors, either multiple hits of support resistance, basically where levels just continuously being used as support and resistance. That can refer to horizontal levels as well as trend lines. And then the other sort of term in terms of confluence we can refer to is also confluence regarding just multiple technical areas, okay, that all sort of come together on a price chart, so that you have horizontal support resistance, trend lines, Fibonacci, retracements, extensions, etc., all coming together within a few pips, okay. And with us doing that or finding those levels, what we're basically doing is we're finding areas where people are more than likely to sort of come together, forming a stack of orders, okay. So not everybody trades support resistance, not everyone trades trend lines, not everyone trades fibs, not everyone trades moving averages, etc. So when you can find all those things kind of lining up on a price chart at the same area, you've got a very high probability that you can have a stack of orders in that vicinity, okay. Now, there's two ways of playing these sort of trades. The first is, let's say we have tight confluence in terms of a buy zone where we've got, and we'll go over and find some levels shortly, we've got horizontal support resistance, we've got trend lines, fibs, retracements, extensions. Maybe we've got a common moving average like a 20 EMA or 50 SMA, 100 SMA, whatever the case is. You just got a stack of things lining up around this area. That block, that vicinity is going to have a stack of buy orders around it, okay. Now, when the larger players want to find liquidity, they will very often basically overshoot that level, triggering the stops, okay, of those technical traders. And we'll go into that a little bit in a little while, but essentially what we're looking for is two ways of playing it. Now, if we start on a daily chart like this, the first thing that sticks out to me is we've got a level of horizontal support and resistance across here. And remember, we're talking about a daily chart here, so we have got to give it a little bit of room, but essentially there's two levels that kind of stand out. The first is this area here. I'll mark the daily in red. So the first area is the top area. Very, very nice levels of resistance. Price obviously came down. It did react on an intraday basis, but it's moved down further into the next base of support, okay. Also, look at the history here in terms of support resistance. We're looking at the candles closing above and below the area, and then the wicks. So you can see we wick back to support. Here we close below, we wick back to resistance. Here we wick back to support, wick back to resistance, etc. Okay, you get the idea. So once we've got horizontal support resistance, the next thing we want to look at is, or the next thing I like to look at is fibs. And if we drop a fib from, we mentioned this during the week, from this swing low up to this swing high, we're looking at the 38% retracement, okay. So we've got confluence at the moment of the 38% and this horizontal level of support and resistance. Okay, and we're talking a daily chart, we're talking 20 pips, right? So it's not a massive amount of space when we're talking about a distance of almost 500 pips up. The next thing we want to look at is potential trend lines. Okay, and we can start looking at just sort of common sense trend lines, things like coming through here and through here, just seeing what's going on around that area. We've also got one across here from this angle through here, and we can also look at another level moving through kind of this lower area. I'll probably see a bit better on the smaller time frame. So essentially, we're dealing in a potential area on a daily chart of about 50 pips. Okay, now we can go and narrow this area down, but this is kind of where I would expect a huge sort of stack of buy orders. Okay, now if we move to the 4-hour chart, this is where we can start looking for other sort of factors or areas, levels of confluence. We've obviously got this trend line here. This is the big one. And obviously that broke, it's come back, it's moving up towards resistance at the moment. We've got this one here drifting through like this. Okay. And then we've got this one. This was a little bit more messy, but we've got one internal line, one running through here. If you'll just adjust this slightly like that. Okay, so there was no bounce, or very small bounce. I'll say small, it's 35 pips bounced off this area here. Then we've moved deeper into this level. Now we can go and find the next area of, or fine tune this level of support over here on the 4-hour chart. Sorry, I'm kind of messing with these lines a little bit. So we basically got a zone kind of here. You see this 4-hour area. We can fine tune the daily level. So we can move into this area a little bit closer. This trend line stands out. We can get rid of these trend lines. I just want to know where they are in terms of price. And obviously we've got this big trend line which is being broken. So I just obviously want to be wary of that. So at the moment, this whole zone now moves down to kind of this area here. Okay, this area. And if we now have a look at other Fibonacci levels, so we can look at these smaller swings. If we draw a fib from this swing low up to this high, we have at this support resistance area 79% retracement. Okay, so we can even move down now kind of to this zone and start to pinpoint the area, just obviously being aware that we've got this level as well of the 38%. Okay, so I just want to be wary of those two zones. You see the 70.7 is also lining up there. Okay, so what we can also do now is, let's adjust this slightly, is look for potential extensions. Now we haven't covered extensions much, but if we drop a fib from this high down to this low, price retraces 79%, and it's dropped down to the 1618 extension, okay, which is a very common target for people to take profit at. So this is the kind of very high probability zone that we're dealing with from a daily chart, okay, daily 4-hour area. So now you can see in terms of confluence what we've got stacked around this zone. We've got this daily 4-hour horizontal support resistance level, a 79% retracement, a 161 extension, an uptrend line. We've also got the big 38 retracement from this large swing in very close proximity to this area. And we can now move to the hourly chart and just do the same thing. Okay, so just have a look at areas of interest that could stand out that we maybe haven't seen very clearly on the 4-hour chart. So if I draw from this swing low up to this high, in terms of extensions, the 1618 is coming kind of below that area. You'll see that area, that's kind of where prices basically stalled exactly to the pip pretty much. Okay, so I just want to be wary of these extensions and build basically a case for a potential long trade. Okay, so when price gets down to this area, you've got a few options. So obviously now we've just spoken about finding confluence. We'll start talking about well, we covered one pattern yesterday, and one of the patterns which we spoke about yesterday was just the 79 pullback, which was, if you have a look at this move here, we kind of have a little bit of buying pressure off. So we would want to look at drawing some fibs up like this. It's pretty double top there. And then look for a pullback to the 79% retracement. Okay, so that didn't actually happen. It didn't get deep enough. However, if you look at this next swing here, and I'm just talking about a quick pattern here, there's the 79% retracement. Okay, so it's, we're talking very, very close to the buy zone here. Your risk can go, just below this area of support if you want it to be a little bit wider. But, we get the reaction, and this is just one of the many patterns that are obviously available. But as I said, today we're just talking about confluence areas, okay? Areas of interest that we want to be looking to take trades from. So that's kind of how I would work it, okay? Doing a top down from the daily. Remember, the daily chart, higher time frames, always going to have more power to them, okay? Because more people watch it. It makes sense versus the smaller ones, okay? So what we have is essentially a very high probability buy zone here. Now, what we want to look at is other areas of interest, but now to the short side. So if we now just work our way back to what I'm going to do is just clear these lines off here. Is just work our way back, okay, now, and see what we've got in terms of resistance. Well, we obviously had this level up here, which we were looking to hold a support at 3,800, right? We didn't get, price obviously tearing up to new highs. It obviously broke through, but price come back now, and it's using this level currently as resistance, okay? So this, obviously, we don't know, that price is going to hold as resistance. Nobody knows, but we can just build a case to see what we've got kind of around this area. Now we've got this level of resistance. Okay, it came back to support, This is a little bounce from the daily chart. Now it's into resistance again. Okay, so we've got a level there, and then just above us we've got another little zone over here, just once again just chopping through those wicks. Okay, so this is obviously the 4-hour chart. What I would look at is this big swing down first of all, okay, from the very high down to the very low, and you'll see we have kind of the 38 lining up with this zone over here. Okay, now ideally you'd like to have the larger swing lining up kind of at an area like this, but nevertheless market, it doesn't always work in a picture perfect way. Now if we move to the hourly chart, we know where the big swing is, we know where the big 38 is. We can now look at hourly areas, and we've got an hourly kind of zone here. Let's mark this up in there. Okay, so that area there. So essentially we've got this band here, about 7 pips, where we've got a daily, 4-hour and hourly zone, very, very tight together. And then just above that we've got this little patch. Okay, now if we draw some fibs from this intraday swing down, what we have is a 618 retracement, okay, lining up with this area. So this would be reason between the 618 and 70.7 8 pip zone is where we could look for selling opportunities. Okay, if that area doesn't hold, then I would look up towards the 79 to 886 zone. All right, so we've got kind of within a 10 pip range, we've got a 79 to 886 retracement of this downswing, this 4-hour block area, and the big 38% retracement from this big downswing. Okay, so just nice confluence. That's if this area here doesn't hold. So what we can do is we can go to the smaller time frames and just look for some kind of pattern formation. Okay, now we've got obviously price drilling up here, 1, 2, 3, 4 hits, okay, into the level, and now we're finding a little bit of support here, okay, little 2-bar reversal, which is a decent reversal pattern, bouncing off support, okay. And if we just move down now to the smaller time frames, here's the 5-minute chart. So we've dropped from resistance into support, and what we could look at is two ways of doing this in terms of patterns. We obviously got this nice 3-4 drives up into the level, is either wait for price to break and close below this support area, or we can look at taking a trade on a retracement back up to this 38.5 with a stop above the high. Okay, so there's no right or wrong way of doing it. It's only kind of what suits you as an individual, right? So we could even move down to the 1-minute chart and just kind of, look at this swing a little bit clearer and see what's standing out to us. So, I mean, just as an example, I know this is all about kind of just working with confluence areas, but let's have a look. This is a 1-minute area here. Maybe we could pick away at a shorting opportunity kind of in the zone with this, like I said, it stops above kind of this high here, and see if we can get a move through this. Now, obviously, it is a little bit more risky because you're selling into this area of support, and if the buyers are truly in control, the support area is where you're going to see fresh demand coming through. That could take out the highs. We don't know that, okay? So it is always a little bit more risky. The more conservative way is to wait for price to obviously break down. Now, what I'm going to do is, just for illustration, we're going to sell short now. I'll just need to mark this on here quickly. So we've just entered short. You see the little reaction, and I'll put a stop loss kind of just above the high here to give it a little bit of breathing space. And because we're not quite sure exactly which level price may deal from, maybe this area, maybe this area. It could even be a little 79 retracement, which is obviously a lot higher up here. So, but it's only like 3.5 pips away. So these are all little levels of resistance where sellers could quite easily come in at, and obviously price pops the highs, then I'm not really interested, because then we can move up to the next area further up. All right, so this is kind of how we build a case. We've got a confluence zone, we've got a pattern, and now either you trade it straight on the hit off the level like this when we touch the top end of the channel, okay, or you're going to wait for some kind of pattern. And as I said before, there's tons of patterns. This is just simply we're using support flipping to resistance, okay. But obviously today's class is all about sort of a confluence. So let's have a look now at the pound dollar. Okay, and we'll do the same sort of thing here. We're looking for confluence on a price chart. Now, we've got this area here. Prices acted as support and resistance. If we draw some fibs from the low up to the high, we have a 618 retracement, which is where prices stalled out today. Okay, so there's the zone on the daily chart. Now the next thing is, do we have any trend lines or anything like that we could see price stall at? Now we've got this external line here, and then the inner line coming through here, and even here. Now I'll kind of be watching around this area. So we've got a hit here, and we've even got these extreme swings up here, but that's going to be pretty tight. Or actually, I could draw this in and show you guys. So from this very low, there's a second hit there, and we'll just zoom into this area. So this is kind of a zone. Remember, we're talking daily charts here. They're not going to be picture perfect, bang to the pip all the time. Okay, you're going to get price moving off these areas. That's just the nature of the market. So what else can we find? Well, we have this area in here, this 4-hour level. So I'll fine tune this level. All right, nice horizontal support resistance in here, and we can adjust this line thickness there a little bit. Okay, so if we now have a look at extensions, we draw a fib from this high down to this low. So price has dropped, it's then rallied up to the 79 retracement just passed, and then it's dropped off, and we have a 138 extension. Okay, so a nice bit of confluence in that area there. All right, we could also look at further extensions, maybe from this swing low up to this high, and nothing kind of matches there. Okay, so just something to watch. All right, we can also look at potential trend lines, maybe running down, at these kind of angles here. We've got a hit here and one here. Okay, so we're just really playing around with what's in this vicinity. So you can see that at this area here, we've got a stack of sort of levels lining up, and I'll need to just adjust this trend line because the joyful MetaTrader is always kind of messing about like this. Okay, so we've got a hit there, and we have one through there. Okay, so that's obviously miles away. So there's the 4-hour chart. Okay, little trend lines coming through here. You can also obviously look at little channel lines coming down in this vicinity here. We discussed these kind of lines as well the other day. Okay, so at this area here, obviously you can see the buying pressure coming off here. We've bounced like 40 pips. Okay, we can look for some kind of buying opportunity. Okay, something of interest here. And let's just go down to the hourly chart. So here's the hourly chart. Okay, so we want to look for some kind of pattern that we can identify with. Okay, you can obviously play the level like this. I personally think it's a little bit aggressive, just because price can bleed through a level, 50 pips no problem, and then it changes and it moves all the way back up. Okay, so here's kind of the hourly chart. We come down, hit the level, little head and shoulders pattern here. We rally, come back down, we run the low, stop hunt, rally, 79 pullback, rally, pull back again. And if we look at this here, prices come down. Here's the 79 retracement. I actually traded this one earlier. This one here. Then we had another one on the 1-minute chart there. Right there. Now we've got this one, back to this level again. Okay. I'm just watching this euro. So the euro, just coming back to the euro. The euro is now starting to move off our area of interest. Okay. So, depending on what you want out of the trade, remember we're talking about a very high time frame area of resistance there. So, just depending on how aggressive you are, you could get your risk out on the trade. You can maybe move it, just above this swing high here. Okay. So now you've reduced your risk on the trade. And now you're really looking for the sellers to take control of this support area and flip it to resistance. Okay. Just below us though, remember, I don't know if you guys noticed, but we had this area, this base, a very tight area range here, this blue line. Nice consolidation, nice bullish candle. Price is likely to find a bounce off there. Okay, so what we can do is, just look to cover this kind of here. This will be 97. Okay, so I just want to see the spread on here is okay. That's a decent spread at the moment. So we can just shoot for this hourly level because that's kind of, where we would think price could bounce. So we now have a risk of 2.5 pips for 7 pips. All right. So sorry, if we just come back to cable now we're in a buy zone here. We can hit the bid. Okay, we've actually bounced off here already, but I'll just play it anyway, just as a example. Okay, with a little stop loss, I'll put it just kind of below this area. So we're about 12 pips. The reason I'd use a slightly larger stop is because we've been down to this area a good few times already, and we could quite easily just stretch into this little base below this low. So you could put a little bit of a breather in here. You don't have to. You could, use it really tight, and you're going to use about 10 pips. So this is kind of where we can use the confluence zone. Now, the other thing to take into account is the more oftentimes price comes back to a level, okay, the weaker the level normally becomes, right? The fewer orders are left at that zone that we're looking at. So we've come down, we've tagged this area here, and we rally, nice reaction. That was the strongest. You can see that high there has pretty much been the highest high the first time back. Then prices, pulled deeper, picking up more orders, and we've rallied, but we haven't been able to take out these highs. And now we're kind of moving back into this area again. So, we could quite easily stretch down, further down here. We still haven't, actually, maybe, where is that level? Yeah, never mind, we have already. So, yeah, so, we could quite easily reach for orders below these lows because there's going to be a stack of orders here, right? We don't know that. So, just things you got to take into account. So Euro is just playing about now. We really want to see this resistance area hold now. Okay. And cable still very weak at the moment. Right, so we've got confluence, all right? We've got confluence. Now, I wanted to... As I was actually playing with this CAD earlier. We had on the CAD, you can see the order here, we had price come down. Okay, obviously, it's a big bullish move. Fundamentals are very bullish on here. We get some positive data out of Canada, and it gives an opportunity to reload on the buy side. Okay, so we've got this key level of support on the daily chart. Right over there, key support on the daily. On the 4-hour chart, we've got this, this area here. So we got a little tight zone there. I'll just get rid of this water here. A little tight zone in there. Okay. So that's the first thing I want to look at. The second thing I want to look at is fibs. Now, this is a little bit on the messy side because we've got this swing and it pulls all the way back, and this swing and pulls all the way back. So in this case, on this 4-hour chart, I would be looking at this swing here from this low up to the high. We have a 38% retracement right into that zone. Okay, so just very, very nice confluence. And then you can also look at things like potential trend lines. Okay, this one doesn't come through at all. In terms of this upswing, doesn't look like we've got kind of anything of interest really. This doesn't stand out on there. If we go to the hourly chart, we've got this range here. Okay, so this is kind of what we're looking at. Yeah, and if you now just have a look at this, from this swing low up to this high, we have a 79 retracement, okay, with the same number. So just very, very nice tight confluence. And you see the reaction, we get off there. Now, what I was looking at was this. You see the buying pressure off, and we pull back, we rally, we pull back. I was looking at a 79 retracement to get long here, okay, at 1181. But we just haven't pulled back. Okay, so we missed that. And the target zone I was kind of watching was this initially. So that would have been about 40 pips, risk wise about 10. Okay. Okay, so Euro has now stopped us out. You see that spike back into resistance. That's taken us out. So there's no sellers willing to commit lower, which is absolutely fine. There's nothing wrong with that. We look at cable. You see the buyers starting to come off here. Now, what we can do, we've got a minute to go before this 5-minute candle closes. So if this candle can close nice and bullish, what we can actually do is we can move some risk out on this trade, okay? So remember we spoke about this pattern yesterday. If you want, you can play this 50 area. As I said, I personally, on these small swings like this, I look for a lot more out of these things, okay? Because when they go, they'll crack on and they'll fly, okay? And what I'll be watching that stands out to me on this one is we've got a level of support. See this wick here? Becomes resistance here, bang, bang, bang. This kind of level, and there's a little level kind of just below that. Okay, so that would be a conservative. About 65.24 as a target zone, okay? So let's go back to the 5-minute. There's the close, nice bullish outside bar, okay? And what we can do now is we can move some of this risk. I'll just put it down kind of just below the A86 area, okay? So we now have 5 points of risk, and our target, I want to be, actually what I'm going to do, I'm going to shoot for the 127, which is a well monitored number. It's 2.5 pips away, okay? So that's something I'll play. So we're kind of looking at a target of 30 points now for 5 points of risk. So you can see the risk reward, we're looking at kind of 6R if it pays, okay? If it pays. So it changes. This is what we call revolving R, or average risk reward, okay? 2 terms, more average risk reward. But instead of starting with a fixed risk reward, where we say, I must have, for every dollar I risk, I must have $2 profit. That's kind of very textbook style, because the market doesn't work like that. It continuously sort of evolves, as it moves, as price moves. We can, in this case, we've been able to reduce our risk, by, almost 2/3. What did we say? We started with 14 pips or something, I think it was. I don't know, maybe it wasn't that much. Maybe it was, I don't know what it was. Maybe it was 14, I can't remember. So, we can change it. So now we've got like a 5-point stop, and we can see, if the buys are here, maybe we can see a push up, okay? Just something you can play around with. So question, do I take partial profit on smaller time frame? I'm not a huge fan of taking partial profit if I can help it, because it really dilutes the risk reward, okay? It really dilutes the risk reward. But it's, I don't want to say I don't do it, because you can still do very nicely from it. Just make sure that if your second target, your second take profit, that you're really going to make a decent pack on. Okay, so if it doesn't get hit, fair enough. But if it does, you want it to really pay you well. Okay, because, and there's different ways. There's really different ways of taking partial profit. I'd probably go half. That's probably the easiest way. You can scale in thirds. So you could split your position up, and obviously the larger the size you trade, the easier it is to do that. So if, for example, you're trading, let's say 10 lots, whatever it is, 10 micros, whatever the case, you could split your position up and then take off. Look to take at least 60% of the position off at your first take profit, okay? So that the rest of it is kind of just running. So that's kind of what I would say, okay? In terms of testing, it probably tests best around taking off around 60-70% off if you want to scale in sort of multiples. The other option, which I know some people use, is they scale in thirds. And what they do is they scale at even parts. The first part is a scalp. So they'll literally look at, let's say they risk 1, they'll take half off, okay? So if let's say they risk $1, they'll take off 50 cents. And what they do with the remainder of the position is they get their stop up, okay? Not to break even, but they get it up. They get it up by half. And if I'm correct, I need to think about it. But I think if I'm correct, it reduces the risk by 83%, something like that. Then the second part of their position, they take off at 1-to-1, and then they move to break even. And then the third part is basically what they're looking to run as a swing trade. So they'll just let that thing run and they'll trail it on a higher time frame. So if they got in off an hourly chart, for example, then they'll try and trail it on a 4-hour daily chart. So when it goes, they're looking for kind of like, a home run type thing. So, position management, trade management, there's so many different ways of doing it. I used to do a lot of scaling out, kind of, if you're risking whatever, 20 pips, go for 20 pips on half and then look to see if you get a nice runner. I've probably kind of more evolved to just taking everything off at the 20 pip mark, kind of reduce the risk like I've showed you here. So, you're risking, let's say you start at 1-to-1 type thing. So you're risking 1 to make 1, but now you reduce the risk and now you're looking at, 5 pips to make 20 pips. Okay. So that makes sense. So just back here. Okay, so let's just carry on here quickly with confluence. We've got another 20 minutes left of the class. If we have a look at the Aussie dollar, we have a level of resistance where we're currently trading into at the moment, right up here. Okay. So if we look at the 4-hour chart, pleasure, we have the 4-hour, we've got a level of resistance up here. And like that. Bang. Okay, also you can see the level of support and resistance flipping across here. We drop some fibs from the high down to the low. Here's your sell zone in here, okay? Just nice confluence, daily 4-hour fib retracement, okay? You can also add trend lines across, just play around with the swing highs. These are kind of more internal lines. External, I don't think I see anything that stands out. There may be something up further higher up, like coming from, we can't even get there. There may be something coming up from here somewhere. I'm not sure. I'm not gonna actually mention too much detail for now, but you get the idea. Okay, so you really just want to build as much as you possibly can to find an area of interest. Now we can also add in some extensions. I don't see anything here. You've got an extension, a 2.0 extension lining up there. It's nothing overly exciting, but looking at this area here, that's pretty decent. The other thing you also want to watch, which I forgot to mention, is your option expiry numbers, your round numbers, okay, like 9100, etc. Because very often you'll find those levels also lining up, pretty tight. Now we have above us, you see kind of this area here. I would look at this next level here, this base in here, 9100, 79 tracing just above. If this level here doesn't hold, so at the moment, if we go to a 15-minute chart and just have a look here from this drop down, you see this little pattern, how it starts repeating itself. There's a 79 retracement. We get a little reaction, okay, a little 10-pip move. So it's just something, a way to enter. There's, like I said, there's tons of ways. There's another pattern cruising up here. So it's really just looking for the confluence. You can even fade the level. Okay, so when price comes into this area, you can fade the level. You can look for candle confirmation at these areas. There's different ways of doing it. The main thing is you understand kind of how to find these areas. Okay, let's see what cable's doing. Nothing very exciting. Euro, we may have been a little bit aggressive on the euro. So we can look at the 1 minute, and there's this swing down. So we get nice selling pressure. This is what I mean by selling pressure. Selling pressure down, retraces back. That's your sell zone, okay? So let's continue. We have the dollar yen. This is a daily chart, and we covered this resistance area already, but here it is here, 102.51. Okay, nice level of resistance. Below us we've got support kind of down here. Okay, now if we go to a 4-hour chart, we can draw some fibs on these, and you'll see them a bit clearer than on the daily. But from the high down to the low, very, very nice level here, 50%, 4-hour area, daily level, all kind of lining up. Okay, all within sort of, what are we talking, 16, 17 pips, somewhere around there. Okay, remember this is a daily swing that we're talking at. And then we can look at just the reverse from the high, sorry, the low up to the high. We have around here, this kind of area here, about 7 points. We've got 4-hour area of support resistance across here. Daily level, 618 area, okay? So these are the two areas of business I will be looking at, okay? You can also look at this swing here. Maybe there's an extension on here. From this swing, we retrace 886. There's the 2.0, okay? And that's pretty much where price got capped. So in this kind of 18 pip range, we would be looking for a potential selling opportunity. And then down here, you see a much smaller the zone is like 6 pips. We can look for a buying opportunity. Okay. Now, if we go to the hourly chart, we just do the same thing really. We just kind of tighten up these zones. All right, tighten up these zones. We can draw some flips from here to here. Maybe there's an extension or something there. So see that one kind of 127 and 38 extension lining up with a 1618. So this would be kind of a key buy zone for me. Okay, and then obviously this area up here would be the sell zone. And in this area here, what we have, if you wanted to just trade this area here, you can look for this pattern. We've covered these before, but this pattern actually forms, you see the 886, that would be the completion point of a bearish bat pattern, which would, be a great little sell, because you'd sell into this, this tight level, and I would sell just straight on a limit order. I wouldn't even wait for anything else happening. Okay. So if that makes sense to you guys, just go through some of these other things here quickly. Euro yen, New Zealand dollar. So we can let's do New Zealand dollar here quickly. So we have level of support, level of resistance. Okay, there's a level there. We can just fine tune it. So we got this area here. I actually went long on this pair twice today, and the first one paid a lot better, and then I actually bailed on this area. But we had price obviously drop, hits this key level of support. So you just want to kind of play around and see, does it have some Fibonacci areas in it, anything like that? Well, we've got, kind of depending which way you want to look at it, but I would look at this zone here, 618 daily 4-hour zone, and maybe maybe there's a trend line coming through here. I don't quite know. There's something running through. Kind of between here and maybe here. Play around with it a little bit. There's an internal line running But as long as I know this is kind of a zone I want to be focusing on, okay, that's just really what you want to take away from this. You're not trying to be on a high time frame, pinpoint precision, okay. And we've got this line in here. So in terms of patterns or opportunities to get in on this, we've got the swing up, okay. Price drops, okay, drops further. We get this head and shoulders here through the session. Then we rally up into that resistance area, which came off quite nicely. You'll see in terms of this swing, this one didn't really hit the exact area, but kind of zone a little bit on the wide side. And you could even look at this swing down here, just because it's more impulsive. So you know, as I said, you're looking more for little zones and just trying to find what kind of sticks out. So you've got to run a 10 pip range to be looking to get short, and down here you've got a range of about also 8-9 pips, somewhere around there. So it's at these areas where you're looking for some type of entry. As I said, you can play just a bounce, a little bit more risky, but patterns are plenty. Okay, here we've got a head and shoulders pattern. We took that 79 short yesterday for a few points. Then here was another 79 retracement, which is currently paying quite nicely. And to the short side, we've dropped off, and now we're starting to cruise back up. And you could look at, there's a little, it looks like a Gartley maybe, just in terms of extensions. Okay, so the 79, 127 extension, and that's coming in right there. Okay, so what we could do is we could look for a short at 0.8558. Is that right? Yeah. With a stop loss, you can measure this, so about 10 points. And I would add a little bit on there, so maybe let's call it 70. Let's go with 70, 85, 70. Okay, so stop about 11 pips. And targets, we can kind of look down here. We'll just kind of see how we go. Now, in terms of this is in terms of fundamentals. This is very, very bullish at the moment, so it's not something I really want to be looking to sell short. But just for illustration purposes, this is how I would go about it. Okay, we identify the confluence area, and in terms of trading the confluence area, there's literally thousands of ways of doing it. You can look for candle patterns, you can fade just the level, you can look for certain patterns. I've shown you the patterns I like, the ones that kind of I find work for me, and we just go about our business. Okay, so pretty straightforward. I think a cable still sitting about, euro plotting about, what was the other one? Aussie, yen. Any questions on that stuff? Got a couple minutes left and we'll wrap it off. So you're just coming back, with regards to taking partial profits. Be very careful. As I said, it's going to depend on the type of trader you are. Okay, I know guys that take 6 pips, and then they let the other trade run, and they sometimes they're just catching 300, 400 pip moves. Doesn't obviously happen very often, but they take their 6 pips or 10 pips and they get to break even. But they very obviously the sums have to add up. Okay, the sums have to add up. You have to obviously be right pretty often. So I think you can have this sort of debate with many traders, and it really comes down to preference. Okay, in terms of psychology, it's far easier to be in a trade when you actually have banked some profits, because then you don't have to stress. You're sitting there sweating it out because the market's coming back on you. Is it going to come back on you all the way? All those kind of things start going through your head. So nobody ever knows where the market's going to go. So in the next session we'll be talking about psychology, and the guy that I'll be mentioning, he actually swears by trading in thirds and scaling out because of the reason you just don't know what's going to happen. Okay, and you pay yourself as the market goes your way. But the same thing you've got to take into account. If you're not right enough times to do that, then you're going to make a red smear in your account. It's that simple. You just got to make sure your hit rate obviously warrants that. Okay, and only what am I doing here? Only you know that. Okay, I can't unfortunately say the one's right and the one's wrong. You've got to sit down and figure that one out. Cover risk moving to here. Right, guys. So I think we're pretty much done there. That was all about finding confluence. I hope you guys kind of walk away and kind of understand on how we can find these levels of interest. And obviously, I've given you an idea of how we could trade them as well. Okay. So we'll wrap it there, and then I'll be back in a few minutes. I want to try and find something for the next class to talk about on strategies when we speak about psychology. Cool, nice one, guys. I'll chat to you shortly. Thank you.